In this presentation, we will work a problem posting transactions to the Capital Project Fund, and we will also create financial statements from the completed Capital Projects Fund trial balance. Information is going to be on the left-hand side. We're going to enter that information into the blue area on the right. We'll have the general journal. We will record the general journal entries. We will then post them to our worksheet. The worksheet including a beginning trial balance, adjustments, ending trial balance. This giving us some context to see the accounts going up and down. We have the order of the green accounts being the assets, the orange accounts being the liabilities, the light blue accounts being equivalent to the equity accounts in a for-profit organization fund balance accounts here, and the darker blue accounts being equivalent to those income statement accounts or the temporary accounts, the accounts that we would expect to roll over or out into the what would be equity accounts for a for-profit organization, the light blue accounts. So we're going to go over to the left and see what we have here. The first transaction says we transfer from the general fund $670,000. So we've got the transfer in. We're going to increase then the cash. I'm going to say cash is going to be increased by the cash amount, and then with the other side is going to be a transfer in. So we're not going to call it revenue, but it's kind of like revenue. We're going to call it a transfer in. In other words, it's going to be a flow type of activity. We're going to call it an other financing interfund transfer in. So other financing interfund transfer in. We'll pick up the amounts then, the amounts being equal to that 670. That's going to be the debit, and that will be the credit. We will then post this out. We got the cash on top. We're going to post that first. We're going to go to the cash over here in our journal entry. We are on our trial balance. We are in K3 equals, and we'll scroll back over and pick up that debit amount. Then we want to pick up the other financing sources. So that's going to be down here in what would be similar to the income statement type accounts. We got the interfund transfer in. We are in cell K12 equals, scrolling back over, picking up that credit. Then there we have that, and we are back in balance indicated by the green zeros. Let's take a look at number 2. Contract assigned to construction company. So now we are the government. We have contracted with a construction company to have a contract started. Now note that nothing really happened. This is similar to a purchase order for like the general fund where we send out the purchase order. It's an estimate. We haven't received anything and we haven't paid for anything. Same thing with a contract. In essence, we've contracted a contractor to do something, haven't done anything yet, and we haven't paid them yet. Therefore, not typically a financial transaction for accounting purposes. However, governmental accounting, we want to assign this out as we have with the purchase order. We use the same account. It's going to be called encumbrances. I would call this kind of like a holding account. So we're going to hold, we want to record the expense, but we can't do it yet because it hasn't had a financial transaction in accordance with the accrual or modified accrual basis yet. Therefore, we're going to put it into the expense-like account until we can put it into the expense or the expenditure, which will be encumbrances. So we're going to debit the encumbrances. That's going to be increasing similar to an expense. The other side then going to that other account that we have to stuff it somewhere because we don't have any other place to put it because it's not a liability yet. We haven't got anything yet. It's going to go into the equity section, which we're just going to call encumbrances outstanding, which will be the equal and opposite amount of basically the encumbrance. So that's going to be the other side. Now we'll pick up the amount. The amount is going to be equal to this $4,260,000. That'll be the debit. That'll be the credit. Let's go ahead and post this out. We're going to start with the encumbrances. So we'll scroll over to encumbrances. There's the encumbrances. We are in K14 where we will say equals and scroll up to that debit amount and enter. So there we have that. The other side then in encumbrances outstanding. So we will scroll over to encumbrances outstanding. That in K10 equals, scrolling over and picking up the credit, $4,260,000. There we have that. We're back in balance indicated by the green zeros. Let's see what's next. We've then got number 3 says the vouchered costs of the $91,000, and it's saying here that this was not encumbered. So we had not included this. We just recorded the encumbrances here. We're saying that this item wasn't included in the encumbrance. So this is something that we didn't, in essence, basically already assign out within the contract, and it's over and above that. Therefore, we're not going to be reducing the encumbrance and then recording the expenditure as we would if it had been included in the encumbrance, but instead just recording the expenditure. So we're going to record the expenditure rather than the expense because we're using the modified accrual method. We're going to pick up the construction expenditures account. The other side is going to go to the vouchers payable. So we're going to say vouchers payable, similar to our accounts payable type account, a current type of account, and therefore on the fund accounting. So we're going to say then that the amount will be the $91,000 for both the debit and, of course, the credit. There is our journal entry. We're going to record this out then. We'll start off with the expenditure for the construction expenditure. That's going to be down here. We are in cell K15 where we will say equals. Scroll over to the 91,000. Then we want the voucher payable. That's going to be the credit. So we're going to be up top in voucher payable. That's in K5 equals. Scrolling over to the credit. And there we have that. So we've increased the payable and the expenditure back in balance down below. Next item, we're going to go to number 4. Payable from the enterprise fund. So a payable from the enterprise fund. So the enterprise fund is another fund. And we're going to say, in essence, the enterprise fund, which is a proprietary type fund, is charging us for something that they've done for us. So now we owe money then to the enterprise fund. So we're going to say that that's going to be an expenditure on our side. We're going to say that this is a construction expenditure. And then the other side is due to another fund. So it's an inter-fund transfer. So we're going to say the other side is due to other funds. So it's an inter-fund item, and this is going to be the 27 equal to the 27.5. That will be the debit, that will be the credit. So let's post this out. We're going to have the construction expenditures once again. So we're down here in construction expenditures. There's something in it in K15. I'm going to say F2 plus, and then F2, so we can use the arrows to move over to that 27.5. Then we have the due to other funds. That's going to be the credits. So we're going to be up top in cell K8 equals, and we will scroll over to that credit and enter. So there we have that. That then puts us back in balance. Now we're going to see what is next. We are now on number 5. So we have an invoice for progress. We got progress invoicing then from our contractor that's working on the capital project. Contract invoicing. Therefore, we're going to record this. Now, we've already recorded the contract in encumbrances, that holding account that we recorded before a financial transaction actually happened. Now we actually have a financial transaction where we want to record this in construction or construction expenditures. Before we do so, then we're going to reverse it from this encumbrance account and then record it in the construction expenditures. Again, we're recording it in construction expenditures because it's a modified accrual basis. This account working on the flow specifically related to the construction process, which typically would be in the government-wide accounting in asset. So it would be an asset type of account. Property, plant, and equipment is probably what we're constructing. Okay, so we then are going to reverse the encumbrances. It's got a debit in it. We're going to credit the encumbrances and debit the other side of it, which would be the encumbrances outstanding. So we'll scroll down to number 5. We're going to say that we're going to pick up the encumbrances outstanding for the debit side. We're going to pick up the encumbrances for the credit side. And we will pick up the amount given in the problem for the amount side of the column. And that's going to be the $1,830,000. That'll be the debit and that'll be the credit. So let's go ahead and record that out. This will just be reversing the encumbrance amounts. So we got the encumbrance outstanding is up top. So we are in K10. I'm going to do this with a keyboard once again. We're going to say F2 plus F2 and then scroll back down. And we're going to pick up that debit and enter. So that decreases there. Then we've got the encumbrance. We're going to record. We are encumbrances in K14, F2 plus F2. Scrolling back over, decreasing the encumbrance. There we have that, puts it back in balance. And then the second half of this is going to be to record the expenditure. So now we're going to record the kind of normal side of it, the expenditure down here. So let's record that. We're going to be in E18 equals the construction expenditure. And then below that, we're going to have the contracts payable because it's a bill we haven't yet paid yet. So we're going to put it into the contracts payable. We'll be using the same amount here, that being the $1,830,000 and the $1,830,000. So this will be more of our standard type of transaction if we didn't have the fact that we needed to do the encumbrance before we did this one. And note that we're not putting this on the books as an asset. We are expensing it, which is unusual for a normal accrual accounting. But so here we go. So construction expenditures, we are in cell K15, F2 plus F2, using the keystrokes again for this, picking up that debit amount. There we have that. Other side is in the contracts payable, so we'll scroll up to the contracts payable. That's going to be up top in K6. So within K6, we're going to say equal and scroll back down and pick up that payable, that liability amount. That will put us back in balance once again, and we can move on to the next item, that being number 6. Number 6 says that we have bonds issued at par. So bonds are issued at par. We're not dealing with any premium or discount, which is nice because we issued them just for the $5 million at the par here. So we're going to say that we have cash increasing. This is going to be a financing of our capital project, increasing the cash amount then. Cash is cash. It's a debit. Nothing unusual there. The other side, however, of course, is unusual because normally we would be crediting bond payable, a liability, but this is a long-term liability, bond payable. Therefore, we would expect that to be serviced in terms of the interest and whatnot in the debt service fund. And therefore here, we're just going to be recording the other side as the flow. We're recording the flow of the activity and therefore using kind of an income statement type of account, which would be similar to a revenue type of account, an increase, an inflow, other financing sources, and proceeds of the bond. So this will be the one, that's the one. So in the debit side, in F21, we're going to say that this will be equal to, and we're going to pick up that $5,450,000. That will be the debit, and yes, that will be the credit as well. So there we have the two. That's going to be our journal entry. Let's post this one out now, starting off with the cash. Scrolling up top, let's go up to the cash item. We are in K3. I'm going to do this with the keyboard again. We're going to say F2 plus F2. Scroll down, and we're going to pick up that debit amount in cash. The other side, going to other financing sources, proceeds of bonds. So here's the other financing sources, proceeds of bonds. We are in K13, where we say equals. Scroll back down, and we're picking up the credit amount there, the $5,450,000. There we have that. We're back in balance. Looks good. Next one is what we're on, number 7. Paid contractor invoice less the 5% retainer. So we know that cash is going to be going down, and we're gonna pay the contractor here. So we have the contracts payable. It's at the $1,830,000. We're going to pay that off. That's the work that's been done so far, but we're going to keep part of it so that we retain part of it for some of the work that was done to keep the contract going, because the contract isn't done yet, so we don't want to pay it all. We want to try to make sure that the person stays around and finishes off what has been started. So we're going to say the contracts payable then is going to go down by that amount. So we're going to say contracts payable. We're going to decrease it, therefore we need a debit because it's got a credit in it by 1830000. And then we're going to put some of it into the retainer. So we're going to just move it from one payable to another payable, this being the retained portion. And I'm going to say that's going to be negative of this number times how much we retain according to whatever policy we're using, 5% in this case. 5% we're keeping. We'll give you that $91,005 upon completion, is what we say to the contractor. And then we say negative sum in accordance with our contract that we've agreed to previous to this. And then cash is going to be the credit. We'll go up to cash. That's going to be the credit. So there's going to be our journal entry. So we're going to remove the payable, but increase another payable for that retained portion, and then make the payment the difference between the two. Let's post this out. We're going to go to contracts payable first. Scrolling back up, contracts payable is what we're looking for. We are in cell K6. I'm going to go F2 plus F2. Scrolling back down, and we will pick up that contracts payable. That then makes it go down to 0. We are out of balance. We're going to pick up the other side, which is going to be the retainer right below that amount. So we'll pick up the retainer right below. That's going to be in cell K7, so we will say equals. Scroll down and pick up the contract payable retainer. And then finally, the last portion will be the cash. Cash is going to be up top in cash. That's going to be the first account. So we're in K3, so something's in it. We're going to say F2 plus F2, and then scroll back down in order to pick up that last cash amount. There we have it. That puts us back in balance here once again. We can go to the next one, which I think is the last one, number 8. It says purchase temporary investment. So we purchased a temporary investment. We're going to take some of that cash we have and put it in some short-term investment in order to get some short-term return on that investment, since we've got a lot of money that so we're going to say investments are going to be debited. We're just going to put it into something like stocks and bonds or something like that that we would get a return on. We're going to say equals and scroll up, picking up the investments. And of course, we're going to be taking it out of cash. Cash is going to go down. The investment's going to go up. And the amount is going to be for this amount. That's what we've decided on. And there we have it. So there's our transfer. That's going to be fairly straightforward. This would be similar to any kind of normal business transaction if we were to put money out of cash and put it into a short-term investment. Note that we do consider it to be short-term because any kind of long-term activities wouldn't be in the capital projects fund typically. So let's scroll back up. We're going to post this. So we're in investments. So investments in cell K4 equals. Scrolling back down, we're going to pick up the investments. And there is that. And then the other side is cash. So we're going to pick up cash. That's going to be up top. In cash, we are in K3, F2 plus F2. Scroll back down and we will pick that up as well. That'll be the cash and enter. So there we have that, and now we're back in balance. Everything looks good. Now what we're going to do is the closing process. So we're going to close what would be the income statement account, the temporary type of accounts, from down below to what would be the equity section. However, there will be an exception, and that exception is the encumbrances. We won't close out the encumbrances. We're going to leave that one there. And so that will tie out to the encumbrances outstanding. So just be aware of that. We'll see how that works with the financial statements as we then make the financial statements after this. We're going to take these ending balances. These ending balances are now going to be our beginning balances down here as we do the closing process. So we're just going to do another worksheet, closing process down here, focusing in on these dark blue accounts, these temporary accounts, these income statement type like accounts, and closing them out into the equity type like accounts. Now I'm just going to do this with one journal entry, and we're just going to basically go through this and say this is what's in there. We need to remove it, so we're going to do whatever we need to do to remove it. We'll construct the closing entry as we go. So this one, there's nothing in revenue, so don't need to do anything there. We have other financing sources. That's going to be kind of like revenue in that it has a credit balance. We need to make it go down. We're going to do the opposite thing to it then, which is a debit. So we'll debit that account. This is going to be a debit. And then I'm just going to put in the debit column, I'm going to say negative of that number. We just want to take it and flip the sign. And then the next one also is a revenue kind of account type in that it has a credit balance, and we need to do the opposite thing to it, debit it. So I'm going to say, now we're going to take that account, and I'm going to say negative of this number. We'll flip the sign. So there we have that. Then we have encumbrances, and we don't do anything with that. If we're going to leave it there, it's going to look really odd, really funny for a post-closing trial balance because it looks like it should be closed out, and we're not going to do it, and it's going to be really annoying, but that's okay. And then when we look at the financial statements, we'll see why that can still work and not kind of throw us out of balance. Then we're going to go to the construction expenditures, and that's going to be, that has a debit balance, so we're going to credit it because we want it to go down to 0, so we'll be in the credit column. I'm going to say negative of that number, and that's it. And now the debits add up to the 6,120,000. The credits add up to the 1,009,000. Therefore, we're going to need another credit. So we want to be in the credit side. I'm going to use the plug formula. That plug formula being negative SUM of these items, debits minus the credits, flipping the sign. That's what we need to be in balance for the credits to be equal to the debits. Where's that going to go? It would go to the equivalent of for profit retained earnings or capital. Here, fund balance. So we're going to put that to fund balance. So we're going to say equals fund balance. Okay, so now let's go ahead and close this out and see what it will look like. So we're going to post the first one to other financing sources. That's going to be up top. That's going to be right here in K36 equals picking up the debit, and that should make it go back down to 0 like that. It does. That's good. That's what we wanted. So then we're going to go to other financing sources again, to the other financing sources in K37 equals, and we will pick up that 5,450,000, making it go down to 0. Then we're going to skip encumbrances and go to the last one, which is the construction expenditures down here in K39 equals. Scroll back up and pick up the construction expenditures. That makes it go to 0. Then we're just left with the fund balance restricted, and we'll put that into what it would be kind of like the equity section. And here, the fund balance asset minus liabilities section, and that'll put us back in balance. So there we have it. So now we have the assets minus the liabilities, debits minus the credits, assets minus liabilities, 4,171,500. That matches this 4,071,500 in the fund balance. Why does these two not throw it off? Why don't these two throw it off? Because they equal each other out. The debits and the credits will just zero out. So we're going to leave them there, and they'll be okay. They won't throw us off. They'll just look really quite funny. So there's going to be our post-closing trial balance. Now we're going to go back up top, and we're going to be constructing the financial statement. So we got the balance sheet, and we've got what is equivalent to the income statement, the statement of revenues, expenditures, and changes in fund balance. We'll start off with the balance sheet. So we're going to go to our balance sheet and construct the balance sheet. We, of course, are going to start off with the assets up top, and the assets, we only have two of them. We've got the cash and the investments. We're not going to be breaking out current assets and long-term assets. Why? Because we don't have long-term assets, and therefore they're all current, and because they're all in one section, we just kind of know that, and we don't need to break out between current and long-term. So we're just going to start off with the cash. We're going to pull that to the inside. We're going to bring it to the inside, and then we're going to pull the subtotal out to the outside. So that's going to be that. I'm going to make it a little bit larger because we can't see the number, and we want to see the number. So there we go. And then we're going to go to investments is going to be the next one. So we'll pick up the investments. Now, in order to we might want to format this to make it a little bit easier to construct. And so we might want to, what I'll do is I'll hide these two columns so that we'll have more room. To do that, you could put your cursor on column J and select over, holding down the left click to K, JK, let go, and then right click on JK selected cells and hide them. Don't delete them, hide them. And so now we got a little bit more space, and we can see this a little bit more clearly, perhaps. I'm going to indent this one as well. So there we have that. And that'll give us the total assets. Actually, let me pick up the investments. The hiding threw me off here. So now we'll pick up the investments. And then we'll have the total assets, which we're going to pull out to the right side. Now we're in column P equals the sum of those two items. And there we have that. I'll make this a little larger too so we can have a number. And of course, we could double check that by highlighting these. There's the 4,381,500. Now we're going to go to the liabilities and fund balance. The fund balance, of course, being equivalent to what would be the equity section for a for-profit type of organization. We're going to start off with the liabilities. This is going to be equal to the voucher payable. Notice we don't have current or long-term liabilities because they're all, in essence, current. Once again, we're going to pick up the vouchers payable. And I'm going to flip the sign now, so I'm going to say negative of that number. There's that one, and then the one underneath is going to be contracts payable, retained percentage. So we paid it all off except for the retainers so far. Once again, I'm going to say negative of that amount. And then we have due to other funds, and that's going to be negative of the 27,500, and that's going to be all the liabilities. So then we're going to say total liabilities, because we're going to total them in the outer column now using the sum function equals SUM, and summing those up. So there's that. If we wanted to double check that, we can highlight these and say that adds up to 210,000 in both places, and therefore checks out. Then the next column is going to, the next section is going to be the fund balance section. And what we have in the fund balance is going to be the fund balance restricted. We're going to put everything into restricted. And so note, we can highlight the whole thing. This is the most confusing point, of course, usually is. And if we highlight the whole thing, that's going to be our total. So I'm going to show that first. Note that if you're talking about for-profit accounting, you typically have the beginning balance, which would be kind of like retained earnings or the capital account. It's at 0 because nothing got posted to it. And then we close everything out to it, as we saw in the closing process. And therefore, usually the whole blue account, what would be similar to the equity section, the fund balance section, and the income statement section should be the equity portion or the fund balance portion, because that would be equal to assets minus liabilities. 4,171,500 equals equity, or what would be equity fund balance, 4,171,500. So that's what we need there. So I'm going to say this is going to be the negative sum of these items. And there we have that. And I'm just going to bring that out as the total as well. So that's going to be the total. And then we'll have the total liabilities and fund balances below that. So total liabilities and fund balance, if we sum this up, we get the 4,381,500. That, of course, matches the assets. The assets matching the liabilities and the fund balance. So I'm going to double underline this one. So there is that. Now, also note that if you look over here, you're going to probably think these two items, this encumbrances, should throw things off, you would think. But it doesn't, because, again, they equal each other out. So if I highlight the whole thing, those two cancel each other out. We could also calculate this as saying it's going to be the sum of everything but the encumbrances. It's going to be the sum of all these, but not the encumbrance. And then close that up and then say plus that one. Not the, so everything, whoop, I included an encumbrance. So let's do it this way. It's going to be equal to this plus this plus this plus this plus this. And then we eliminate the two encumbrances, and we're going to get to that same number as if we just highlight the whole thing, because the debits and the credits of the encumbrances outstanding and the encumbrances go away. So now we're going to look at the income statement type account, or type of form. So to do that, we're going to put our cursor on column N and highlight over to Q, let go, right click the selected area, hide it. And now we're in the statement of revenues, expenditures, and changes in fund balance. So I'm going to make this a little bit, well, let's move this over a little bit, and that might work. So we can see it all here. Okay. So now we're concentrating down here in the dark blue area. And so that's what we're going to call. Now, that would start off with revenue, but we don't have any revenue, which isn't totally unusual with the capital projects fund, because the capital projects fund is there to track capital project, often financed by something other than revenue, such as other financing sources. So we're going to start off without revenue. We're going to start off with expenditures, because the other financing sources and uses typically go below the revenue and expenditures. So we have expenditures, and then we're going to say that we had the construction expenditures down here. That will be equal to, we could just put that in the outer column, because that's the only one we have. So we'll just put that in the outer column, construction expenditures. We might want to highlight them and say we found a home for them as we go. We can say I found a home for that, indicated by the yellow box. That yellow box indicates home being found for that one. And then we have the other financing sources and uses. This is where we can put in those other financing sources and uses, typically one of the major financing functions rather than revenue for capital projects. And we'll pull these to the inside because we have more than one, and therefore use these subtotals. So we're going to say, and I'm going to flip the sign on this one. Double click. I'm going to put a negative in front of it to flip the sign. So we found a home for that one. Home has been found for that one, which makes everybody feel good that that item has a home. And then the next one is going to be other financing sources. I'm going to indent that. We're going to flip the sign. That's a negative over here. We're going to flip the sign by saying negative of that item. And then that's going to give us the total other financing sources and uses. That's the total other financing sources and uses. And this one has a home too. So I'm going to make that yellow so that everybody can see that. And then we're going to sum this up to the outer column equals the sum of those two. So that's the total other financing sources. And then we have the relatively long subtitle here, which is the excess of revenues and other sources over expenditures. And the reason we have to have this is because unlike an income statement, we don't just have revenue and expenses. We've got these other sources and uses, so the subtitles get really long. So in essence, though, we're just going to take this is equal to, I'm going to say this amount minus this amount. And note, this can get a little bit backwards because if we had revenues, we would have, usually the revenues wouldn't be enough to cover the expenditures, and you might end up with a negative number up top. Just note that this is our expenses up here, and these are other financing sources in essence that are winning, and therefore this is going to be a revenue type account. So we're going to subtract those two, or similar to a revenue type account. So we subtract the two to get to the excess of revenue over other sources over expenditures. Now that you would think would match up to this number, but it doesn't because we didn't include the encumbrances. So encumbrances are not included. If we were to add this up without the encumbrances, it would be this plus this plus this, and that's going to be what we have here. Now you might say, well, how can we do that and remove the encumbrance? Because the income statement is kind of tied to the balance sheet. It's part of the equity section. So won't that throw the equity section off? No, because we didn't include the other side too on the balance sheet. So the other side is a balance sheet item that's not included. So although we're not including this amount, which looks like it's on basically an income statement item, we also aren't including the other side, which is on the equity section of the balance sheet. And so we can see that when we tie this out now. We're going to tie this out by then taking the beginning balance. So here's the fund balance at the beginning, which is this amount, similar to retained earnings or capital account. Nothing's been closed out to it yet, therefore 0 at this time. And so that's going to be 0. And then we have the fund ending balance, which of course is just going to be the sum of these two. It's going to be the same number. This number then should tie out to what we have on the balance sheet. Let's check that out by unhiding some cells. We're going to put our cursor on L, over to R, let go, right click, selected area, unhide. And then we're going to see that this 4,171,500 should match up to this 4,171,500, 4,171,500. So there is our balance sheet. There is our statement of revenues, expenditures, and change in fund balance.